What is fundamental analysis? Fundamental analysis is a way of looking at a company to figure out what it's really worth. Instead of focusing on whether the share price is going up or down today, it asks, how strong is this business? It looks at things like profits, sales, debts, competition, and even the wider economy. The goal is to understand the value of the company, not just the price of its shares on the stock market. There are two main types. One is big picture, looking at the wider economy or an entire industry. The other is company-specific, digging into the numbers of a single business. Most investors use a mix of both. Why does it matter? At its heart, fundamental analysis is about making smarter, calmer decisions. If you only ever follow share prices, investing can feel like an emotional rollercoaster. One day you're excited, the next you're worried. By looking at the actual health of a business, you're less likely to be swayed by daily headlines. It also matters for your long-term goals. If you want your money to grow steadily over the years, you'll probably want to own strong, resilient businesses. Fundamental analysis helps you spot those. Investors use it to decide whether to buy, hold, or sell shares, so it directly shapes real investing choices. And there's an emotional benefit too. It gives you a sense of control. Even when markets wobble, you know why you own a company, which makes it easier to stay calm and avoid panic selling. Here's a simple example. Imagine you're thinking about buying shares in a bakery chain. The share price today is £10. If you only look at the price, you don't know whether it's cheap or expensive. But if you dig deeper, you might learn that the bakery made £2 profit per share last year, and those profits have been rising every year for 5 years. You might also see that the company has very little debt and plenty of loyal customers. That suggests the business is solid, and £10 a share might actually be good value. On the other hand, if the company was losing money and closing stores, £10 might be far too expensive. That's the power of fundamental analysis. It gives you context. What else should you know? It's important to remember that fundamental analysis isn't a crystal ball. Even the strongest businesses can run into problems, new competitors, sudden economic changes, or unexpected scandals. No analysis guarantees profit. It's about improving your odds, not removing all risk. It also takes a bit of patience. Looking at financial reports and balance sheets can seem dull at first, but it's like learning to read the nutrition label on food. Once you get used to it, you start spotting patterns and avoiding poor choices. And one common misconception, you don't have to be a maths genius. Yes, there are ratios and numbers, but the big questions are straightforward. Is this company making money? Is it growing? Is it financially healthy? It's also worth noting that not everyone uses fundamental analysis. Some investors look mainly at price charts and patterns instead, which is called technical analysis. That approach is about the movements of shares, not the businesses behind them. To sum it all up, fundamental analysis is about looking beyond share prices to understand the real strength of a company. It matters because it helps investors make calmer, more confident choices, and it directly guides whether to buy, hold, or sell. By using it, you're less likely to chase short-term trends and more likely to build long-term wealth. Think of it as moving from guesswork to groundwork. Instead of betting on luck, you're learning how to read the story behind the numbers. Thanks for watching this video. Not sure where to go from here? You don't need another video, you need a plan. Grab the free 5-day series below and start investing with confidence. The link's right here on screen and in the description. Don't miss out.